Show me the money. This is the Moneyweb Be a Better Investor podcast, picking the brains of professional investors on their investment strategies, successes, and mistakes. Your host, Ryk van Niekerk.
Welcome to this week's edition of the Be a Better Investor podcast. My name is Ryk van Niekerk, and in this series I speak to leading professional investors about their investment journeys. We look at their first investments and how their investment strategies have changed over the years. We also take a peek into their personal portfolios to see whether they practice what they preach. And the idea is to identify a few nuggets of wisdom to help young amateur retail investors to become better investors. My guest today is Kamini Naidoo. Now, she is the Chief Investment Officer at Equilibrium. And Equilibrium, of course, is owned by Momentum. But before she was appointed the CIO, she held several other asset management positions at RMB and Momentum. She has a BSc degree in computer science and honors degree in financial management from the University of KZN, and she holds a Masters of Management degree in Finance and Investments from WITS. She's also a Chartered Alternative Investment Analyst with the Chartered Alternative Investment Analyst Association. Kamini, that's a mouthful, but first tell us about your background. Where did you grow up, and did you ever dream of becoming a professional investor?
Thanks, Ryk, and I appreciate the time. So I grew up in Durban. I was actually born and brought up in Durban, and I schooled there. After finishing school, though, I was considering a career in either veterinary science or computer science. So investments didn't feature at that point. And computer science won, actually. So I continued my studies back home at the University of Natal. After I completed my honors in computer science, I joined Standard Bank on their investment banking graduate program. And that was here in Johannesburg. And that's when I made the big move up here.
Investment graduate program. I haven't heard of that one. Tell us about it.
Well, at that stage, and I'm giving away my age, it was Standard Corporate Management Bank, so SCMB, and they had a grad program where they took graduates from across the country and they circulated them through the corporate investment bank to give them exposure to investment banking and, well, the inner workings of an investment bank. So that's what that was about. It's about a year-long program where we just rotate through the different areas to get the exposure.
And you got in there because of your computer science background, and then you fell in love with investments. Is that pretty much the story?
It's pretty much the story. So while working there, I mean, being in a banking environment, you get the exposure to all the instruments and their mechanics and risks, and my interest grew. So I knew I wanted to get closer to markets, and I decided to study a bit further there. So I focused in on finance and investments in the degrees you mentioned. And shortly after I finished my studies, I got the opportunity to join a company called Frame. So that was First Rand Alternative Investment Management, and they were a sister company to RMB Asset Management. And they had a position as a hedge fund analyst based down in Cape Town. So 16 years ago, I made the move down to Cape Town to take up the position. And well, many name changes and a corporate action later, I find myself here at Equilibrium.
It's a fantastic story, and it shows you how someone's career is sometimes very dependent on breaks you get. It's not careful planning for years and years and picking certain degrees. Sometimes you get into a door and then life takes over.
Yeah, and it's also about following your interest, I think. So it's important to find what interests you and just go with that.
Let's talk about investments. What was the very, very first investment you made with money you've earned yourself?
Yeah, so my first PA investment as such wasn't in stocks. It was actually into a hedge fund. And that was back in 2010, 2011. So before hedge funds, I'd actually moved into a regulated environment. And I invested into a growth type equity long-short strategy, which I still hold today. And I would say it's my first and probably one of my better personal investments.
Which hedge fund was that?
That was the Fairtree Assegai Fund.
Oh, Fairtree, yes. They are actually one of the leaders in the field. Why that one?
Well, at that stage, when I looked back at where I was in my life cycle as such, I was looking for a growth type investment. It was a new fund to the market, and I think we have very skilled managers. So there were many that I was looking at the stage, but that was one that I was analyzing for institutional portfolios anyway. And I thought it aligned with what I wanted from a personal investment. So I was looking for something that had a higher risk profile as such, but with the ability to protect some of that growth. So I was looking for a sort of a racier equity long short type fund. And that's exactly what I got.
Subsequent to that, did you ever invest maybe directly in equities or into other asset classes?
I did look at equities very briefly, directly, but I did feel that the fund managers were very skilled at it, and I decided to execute and rather let the professional do it. So, I pretty much diversified from an equity hedge fund into fixed income hedge funds, into global, but I tried to keep the bulk of the investments with fund managers as such, because that's where the expertise lies.
Yeah, very interesting investment. And currently, I'm not talking about your retirement savings, which I imagine would go into a pension fund or an RA. What is your current discretionary investment strategy?
So the bulk of my discretionary portfolio is in funds, so equity, fixed income funds. I also do have global funds that I'm exposed to. I use RAs. I also use tax-free savings. I use that quite aggressively. I do have some retail savings bonds because those yields were quite good at a stage. So it's quite a diverse portfolio at the moment, just as a function of where some of the opportunities have been more recently.
You are also a chartered alternative investment analyst. Now, I didn't even know such a designation existed, but what is this, and do you still have an interest in it?
Absolutely. So, the bulk of my investment career since joining Momentum has been within the alternative space. So I got the designation quite early in that cycle. In fact, I think on my certificate, there are only 3 digits on it, but it is a globally recognized qualification. And it does focus on alternative investments. So what's quite nice about it is it quite relevant to what's happening in the market at the time. So at the time that I had written, it was just following the GFC, and the bulk of the content was focused on that. So it gives you quite a relevant perspective on what's happening in the alternative space, and it gives you access to content that is continuous. So for example, this evening, I'm joining a webinar on factor investing and how that is considered more globally, and that's through the CAIA program.
Now, this podcast is aimed to assist young professionals, people who've just entered the job market, to start their investment journey. Do you think they should consider alternative investments as maybe a diversification type of investment?
Maybe I'll take a step back and just say that when I think about investments, my investment philosophy centers around diversification. So trying to ensure exposure across different risk and return sources. And by that, I mean investing across asset classes, geographies, and strategies. I think alternative investments certainly do give investors access to a range of risk and return sources that you wouldn't ordinarily get through traditional portfolios. So I think alternatives can play a role within any portfolio from that perspective. It's just important to know what it is you would like to get out of the exposure.
So what do you think young investors should aim to achieve? And maybe can you refer to a few specific options you think they should consider?
So in the alternative space, hedge funds have been regulated since 2015. And under the regulation, these are classified as either retail investor hedge funds or qualified investor hedge funds. The retail investor hedge funds, there are a number of funds available for different risk appetites or tolerances. So I think when considering a hedge fund exposure, firstly, the investor needs to decide on what they want that role to be within their portfolio. So hedge funds can play a range of roles. So either a risk reducer or a diversifier, or they can be a return enhancer, but that comes with the commensurate risk. So when you know what that role is you want to play, you need to then go and look further into which funds would match to what your requirement is and what you're trying to achieve.
It's interesting how the perspectives of the numerous professional investors I've interviewed over the years are, and this is definitely an interesting one. If you could go back in time and speak to yourself just when you started to earn a salary and your career was taking off, what investment advice would you give yourself?
I would probably say to start investing earlier. The earlier I could have started, the better. I do think there's a wealth of information out there, and sometimes that can be overwhelming, which is why I didn't start earlier. So again, it's about deciding what it is you want to achieve and then focusing in on the execution. So I would say start earlier.
And what are your perceptions regarding risk? Because I think it's one of the key aspects of investments not enough young investors take into account. They don't understand risk. How do you think should they look at, let's look at equity investments, just to use an example. Should you go for the potential Capitex and Naspers and other companies when they were still small, trying to hit the 10 baggers or the 100 baggers, or stick with blue chip stocks?
I think it's interesting to think about how we define risk. So in my mind, you define risk as your risk of capital loss. So how much are you willing to lose in any investment? And you must be comfortable with that risk. So it's not just about what you're trying to achieve in terms of your return of your objective, but also about the journey in how you're planning to get there. So what you can get, and this is why I believe diversification is key, because it manages both your growth in your investment, but also the journey in how you get there. So by diversifying your exposures, you manage your risk. So you're limiting your capital loss through offsetting in correlation or your diversification benefit. And therefore, you should get to a better outcome over time at your lowest possible risk of capital loss.
Then lastly, the two questions most people listening to this podcast wait for every week. What has been your best investment ever? You referred to the Fairtree as a guy hedge fund earlier, but what do you regard as the best one you've ever made?
I would say it's my hedge fund portfolio, so not necessarily a single fund. I've selected 3 or 4 funds, which together offer me quite a diversified exposure to the hedge fund risk and return sources, and that would be my best investment.
And the worst one, the one you really don't want to tell anyone about, because all professional investors also make mistakes.
I wouldn't say I have a worst investment, because as I said, I didn't do a lot in terms of single stocks, but perhaps something I could have done better was to start earlier. And I think we all say it, the biggest asset is time. And I think the earlier one starts, the more meaningful that outcome can be.
Kamini, thank you so much for your time today and for sharing your insights. I think it's a very interesting perspective you have, and may it continue to be very successful for you.
Thank you, Rick. Thanks for your time.
That was Kamini Naidoo. She's the Chief Investment Officer at Equilibrium.